your host for the day. We have Darien Tax Advisors here, and it's an interesting one because it's not your normal DeFi project. They don't have their own coin. They don't have NFTs, as far as I know. um, but they are actually coming to give some tax advice, and I think people keep filling in as we go. But really, today is just about asking questions, and it's more of like an interactive thing. And I kind of wanted to chat a little bit about some of the stuff you might have and some of your opinions. But it's more going to be like an interactive, asking your questions that you have around taxes. And then also, if you're in the crew, we will be getting a discount for working with Darien Tax Advisors. So if you're in the crew, you're in luck. You can actually, possibly save some money on your taxes this year. But I did want to start off with some questions. We do things just a little bit differently than I'm sure some other AMAs that you have. I want to just get to know you a little bit on the crypto side of things before we dive into your whole knowledge around taxes. When did you get into crypto?
I first got in back in 2015. I was back on holiday, was with my folks, and picked up a book at my local library.
Mm-hmm.
And it was like Mastering Bitcoin back then. And I was like, you know what? There's something to this. Read the work paper, was a little bit in the euphoric first bull run of 2017, and then cooled off. And then when I really, really got back into it was with my business partner back during DeFi summer. We got caught together in the same place in the south of France during that time. And my OG like DeFi claim to fame is I got the Uni airdrop, which is pretty cool as a CPA.
You got the what airdrop? What was it?
Uni swap. So Uni
Gotcha.
airdrop. Yep.
Gotcha. Awesome. Yeah, that's interesting. So how does that work?
As
There's
far
a
as what part of
Oh no,
it?
no, I'm not seriously
Oh.
asking. We don't have to go through it just yet. Um but yeah, that's interesting. So it's been about, what is it, 5 years now? That's
Yeah, I
pretty
would
solid.
say so. Yeah, personally investing since 2015, and then in a professional CPA format since about 2017.
Gotcha. So you've seen kind of the whole cycle from, beginning to end twice now, right? Just about.
Yeah, yeah, yeah. Between a couple busts, a couple kids, I'm definitely a little more gray haired than most.
Gotcha. Gotcha. I think everyone in crypto is aging at a different rate. I mean, we talk about 6 months being like a year, right? Or 6 months being like 10 years. I mean, people are going to be dying pretty soon.
Just waiting
um,
for my Benjamin Buttons moment.
yeah, right, right. um, all right. So let's take a step back real quick. If you had to guess when the next bull run would be, when would it be? You've been around for a little while. I'm sure you could give kind of your thoughts on that.
Yeah, I mean, I feel like the downs are getting shorter. I also feel there's a lot more institutional money, but it's also being impacted by the more macro. So I'd say once things get more calm with regards to inflation, and
Hmm.
so if I had to estimate, I guess, Q3, Q4. But personally, I'm just DCAing, holding on, and just waiting, and just
Hmm.
stacking the bags.
Yeah, I like it. I like it. A lot of people are waiting for 5K Bitcoin or 8K Bitcoin or 10K Bitcoin. I'm like, I mean, I'll buy then too for sure, but but hey, it's a very good price to be buying in right now. I definitely agree. And then next, if you had 10 coins, like or top 20 coins, let's say, and you had to pick one that you were going to put all your money into for this next round, which one would it be?
Ooh, I mean, with Cosmos's Prop 82 kind of struggling as of late. Before that, I would have said Cosmos,
Really?
but as of
That's an
yeah, I mean,
interesting
before
one.
there's a lot of argument with regards to like MEV and where the project is and like what's the functionality besides just a fiat on ramp. So with that being said, I am definitely a little bit risk off right now. So I have been big stacking on Bitcoin and being Bitcoin maxi, just because of where macro securities laws, basically like now ETH is proof of stake, and what's that mean for securitization and
Yeah.
most of the nodes in the states. So just being conservative and knowing that it's going to be here, but some fun on the side as well.
Gotcha. Gotcha. Fair enough. Fair enough. Yeah, that's an interesting one. I think I'm surprised that's the first time I've ever had someone say anything but. I think the only things I've had are XRP, Matic, Bitcoin, and Ethereum. Those four. This is the
I'm a big
first.
Cosmos Max. I love Cosmos just because of like sovereignty, autonomy, and its separate chains, the SDK.
Yeah.
But because it's so sovereign, there's a lot of like infighting and arguing right now of like, is it whale versus whale, shrimp, validator set versus validator set? So hopefully, I just don't fall into the chaos.
Gotcha. It'll be interesting to see what actually survives. I think we're gonna continue to see chains kind of just move out of the area, move out of the realm of focus. What is, if you had to give an example of a chain that was, larger that is now you don't think is going to succeed in or follow throughout the next run, which one would it be?
And this is beating a dead horse, but Solana.
Okay.
uh, I would say with just how, it's buggy, it's centralized, and I think
Hmm.
we've seen the wake of FTX, they've also were largely capitalized by Alameda. And being a tax advisor who's been working with the Solana chain, they just give bad data as far as like how they plug in with the various tools, APIs. So I have my
That's
own bone to pick
interesting.
with them. It's just like interop with the operability and just getting good reporting. Because I
Yeah.
feel like where things will succeed is just the ability to be more legitimate and operate, be tax compliant, be more open, open faced, and unfortunately a little bit easier to work with from the regulatory standpoint, but that's also going to open up more dollars.
Gotcha. That's interesting. It's interesting that you say that because I would assume that it would have been even more on top of like, for taxes and things like that. I'd assume it would be even better considering the centralization piece. But I guess that's just not a focus.
Yeah, I
That's
would say,
interesting.
it's kind of like well, also too with like the dev community in Cosmos, ETH, and the various EVMs, like it's very much like open source focus. There's like more camaraderie with that. We're just like trying to get like Radium, or the various dexes on there to get good data. It's just, but yeah, I digress.
Gotcha. Yeah, that's interesting. See, I would have thought, what are your thoughts on AVAX? Because that's one that people have been talking about not knowing if it's going to make it throughout the next run. Personally, I feel
Yeah,
like it will, but
it burned hot really early on, and
hmm,
that's and, like with all kind of crypto projects, like it just depends on where you're like when you
yeah,
burn and how far you fall and if you can recover from it at the
yeah.
initial euphoria. I'm not like I hope it's there. Like I think there's a lot of cool stuff being built in the Vax, and also, but they're also with their I'm not as well familiar with as I should be. But I am also just ETH EVM, so anything that's
Hmm.
excess with MetaMask, it's got some play for the long term just
Yeah.
because it can be bridged easily.
Unlike
It's the
Solana.
same format. Yeah, unlike Solana, exactly.
That's funny. Solana has a like strong community though. Like I've heard a lot about the community of Solana as far as especially the NFT community there. So I'm curious to see how everything kind of moves forward then. Cuz it
I
pumped hard. Like it
yeah.
burned real hot for a little while there. I
I don't want to see
remember.
anything go down, but walk me. Like we all had to make it somehow.
Yeah. No, that's really interesting because I'm looking at it now. I'm trying to remember what it started at before the run, but I remember looking at it like it was like $90, and I was like, "Dang, it pumped." Um,
Yeah.
and then it just kept pumping, right? So let's see, like 2021, yeah, it was at the end of 2020, it was sitting at like $1.50. First day of 2021 was $1.50, and it went. I remember it pumped to like $70, and I was like, "Holy crap!" Like it's gone. It's 70x, and then it just continued to go to 250. And yeah, it the rest is history. And then now it's sitting back at like $10, or
Still
14 bucks.
crashes.
What's up?
And still crashes.
Yes, exactly. Yeah, it's an interesting one. There's a lot of assets that are getting hit harder than expected. What are your thoughts on Matic and where it's at
I
right now?
mean, I love Matic. It was my first kind of foray into L2,
Uh huh.
and I just think of it's one of those things within crypto that to the winners go people have just been around. Like try to do another, algorithmic stable coin like DAI. Like it's so hard to catch up, and there's so many projects try to get there, but you're not going to get there. And same with Matic or even Arbitrum. They were some of the first ones to be the L2s.
Hmm.
And I just don't see anything trying to get to the same level because so much value, marketing resources, devs have already been accreted to it. So
Yeah.
I'm very excited about Matic.
I think it's if you're just creating another layer two, you have to have your selling point, right? Like there
Mhm.
has to be something you're bringing. What I'm most interested in, I think, are like the layer zeros being built. like with, for
Mm.
example, Constellation with smart contracts that, or not smart contracts, I'm sorry, state channels that are actually being built as the infrastructure below these layer ones that allows them to communicate and operate together. So that interests me a lot because I think that's going to be like the next evolution for the UIs becoming much easier. Um, it just to me just makes sense that you're going to have chains that are interoperable, right? Like they need to be for there to be a
Enter the
major.
SDK.
What's up?
It's an enter Tendermint SDK and IBC. I'll get off my Cosmos bandwagon.
But there's a lot of stuff about that I think that's super super important, and I don't dislike Cosmos either. I don't like, I will say that much. Like I have some, what is it, Atom, and yeah, I like the network itself. I'm curious to see how it does as well. It's one of those smaller projects than if you look at like a top 5, top 10. There's a big difference there, but I think just means there's a lot of upside. Um, the one question that I was really coming into this that I was like, I was very curious to hear your thoughts on was, I'm sure you've seen like the different pieces, and you might not be the best person to ask about this, but I'm just curious to hear from your perspective, right? Like with crypto.com, or people accidentally sending millions of dollars or even just thousands of dollars to the wrong addresses, or whether it's a centralized exchange or being just an individual. And what have you had any clients that come in and that report these things? And if so, like what kind of advice can you even give? Or like not even, let's say, your position, but what are your thoughts on that as a whole?
As far as what happened to a client, like can you illustrate more on that?
Yeah, yeah. So like what would happen? Let's say you get a client that realized they got sent, $100,000 and are just sitting there like, what do I do with it? What kind of advice do you even give for something like that?
I'm not an attorney. I am a charter professional,
Yes.
charter certified public accountant.
Hmm.
But in that case, I mean, it defaults back to like the IRS's position is like if you earn it, like it's taxed. I'm not one. I've never like come across a case of someone's like found pirates' gold or the Goonies' treasure out on the Pacific coast. Um, but I would say, if it wasn't yours and it just came into like a non-controlled wallet, there's no recourse. I mean, you could send it back if you're a good person, but that's part of, the wild, wild west of living in Web3 and crypto is that if it comes in and it's gone, it's gone. I mean, it's both sides. So I think it's interesting from the autonomy and also just like growing up around money because I think you get really comfort with it. And bringing back crypto is like I'm walking around, 1870s Colorado with a bag of gold. It's like anybody could take it off me if they're good about it. So I don't know, it's kind of fun to have that danger to it, which I hope crypto doesn't lose. But also, I think of my mom and pop like trying to invest in Atom or any other token. It's like they're gonna get hosed.
Yeah, definitely. Definitely. I think back to, like, did you see like the crypto.com issue with that? Right, where crypto.com sent the $10 million on accident instead of
Yeah,
$100. And they ended up suing the person, and they were like, the person had to go
that's
declare
cool.
bankruptcy to sell the assets they purchased. And it's kind of like, I didn't realize that that was even a thing where you were accidentally sent money or found money, and now it's, you know what I mean? Like you literally put it in their wallet, and somehow you still have grounds to sue them for it. Like that confused me. I was a little bit surprised by
Yeah,
that.
yeah, and laws are immoral. So, but like the ethical thing would be to turn it back and maybe you get a finder's fee. But that's just something. I mean, I don't know what I would do in that situation, to be honest.
Right.
I'd probably like send a message and see what would happen, and maybe I get a cut, but I'd probably return it just because I have
Yeah.
to hold my
The,
ethics.
the $10 million that you accidentally got.
Yeah, yeah,
Yeah, it's an interesting one for sure. It's a very interesting one. All right. Do you guys have any specific tax questions that we have? Um, as we go through this, start writing them down so that we have some at the end. But let's talk a little bit about what you guys do at Darien Tax Advisors. I wanna kind of hear just like your everything we've chatted about so far, but kind of
yeah,
the brief to in depth rundown.
yeah, for sure. So Darren Advisors was the brainchild of Faisal myself. He's on this call as Custo. We were working together back in starting in 2017 at a fintech startup, and we got, like I said, got stuck together during DeFi summer. Like we got to find a way to jam together. So he's not a CPA. He's a growth and startup guy. Really build this into something quite remarkable. So we started off working with, a handful of my clients from my existing.
Hello? Hello. We lost him. He said he's on satellite, so that was unfortunate timing though, right as we were getting into it.
His bridges,
Hello?
all your activities. Oh, did you lose me?
For the whole time, yeah.
Ah, man, sorry. Okay, let me try again. Where did I drop off, man? Sorry.
You literally, like, you were just getting into it. Like, you introduced,
Basil. Okay. If I need to go on my mobile, I'll come on my mobile. Hold on. Yeah. Okay. So Faisal and I, we launched this back in 2021. It was a spinoff from my existing practice. We started off with like 25 clients, and now we work with over 300. We're primarily B2C, so doing cryptocurrency tax compliance, amalgamating wallets, understanding activities, kicking out a report at year end, with a special on the more masochistic cases within DeFi, NFTs, play to earn, kind of the fun stuff that most people won't touch. And apart from that, we do, general filings. We also do tax advisory. So there's like good wrapping, bad wrapping, good vaults, bad vaults, and how to handle certain more nuanced situations and understanding and reading the tea leaves, the tax code. And then right now, we're also presently building up our support for B2B. So focused on validators, outsourced treasury and financial management for protocols, play to earn projects, NFTs, miners, validators I touched on, and then a few family offices and investment clubs.
Gotcha. So pretty much everyone in DeFi to start.
Exactly. Like I don't want to hold myself out as like a Bitcoin or just like crypto CPA. I'm full on a DeFi DGen with a CPA license. So if it gets weird and there's a lot of like questions or like I've had clients like, oh, based upon, this tripool, like how could you interpret that? And it's like, bring that to me. I love to kind of suss out what are the tax implications of entries, exits, etc. Because it's not as simple as A to B exchange of, of various tokens.
Yeah, definitely understand that. Not that I understand it. I definitely understand that's important. Is more what I'm getting at. but yeah, let's dive a little bit deeper into what exactly you guys do with this information. Like, what kind of stuff are you trying to help your clients with, and kind of getting everything rolling?
Yeah. So our process is, like our core work is the CryptoCast report, as I commented on, and we use a fantastic tool, cointracking.info. It's like jokingly built for accountants by accountants. It's notoriously unsexy but super powerful. And what we do is we'll basically bring that data in, we'll reconcile, ensure completeness of the portfolio, and then look at its situations, have the conversation of, all right, you decide to do, yield farming on X, protocol. We could consider that LP to be a taxable event getting in, or we could not, and understand the ramifications of that. Because outside of just like swapping for tokens, once you get into the DeFi, play to earn, NFT world, there's a certain spectrum with regards to compliance, defensibility, and positions. And our process is helping understand where do you fall on that spectrum to make sure that you're, taking a position you're comfortable with. Because it's not as simple as this would happen, this I report it, just like with a W-2 or 1099, and just send the IRS. So we've got to take some degree of assertion within the data.
Gotcha. Okay, so you guys are kind of that extra force that you would have alongside, whoever's doing your taxes to kind of do all the hard part when it comes to DeFi, and then that's what you would take to like an accountant or something like that. Is that about right?
Yeah, we're totally cool just doing the crypto aspect. We also are full service, so we can file your individual tax return, your entity tax returns. We can do the financial and accounting behind the scenes. If you have like an existing CPA that, you've worked with for the past 5, 10, 15 some odd years, or have more complex situations, don't want to step on any toes. But I'd also love to work with clients more and do this over. Also motivated by making more and working with people more. But I love a more integrated partnership if we can do full service, because it makes the conversation and the game of telephone not as hard.
Gotcha. Yeah, that definitely makes sense. I can imagine that it's a little tougher when you have a couple different people you have to, keep contacting for a specific client, and it's just a hassle getting back and forth, huh?
Yeah, and I had some dude's CPA, he called it the cryptos, and I was like, oh man, come on, like we're beyond that. The crypto, like using an article to define that was just hilarious. It's like, no, that it's more than just that.
The crypto, the crypto. Really, that surprises me that people aren't even a little bit more up to date there. But
I mean, I'm a CPA, but like most CPAs that are licensed and been doing this for quite some time are a little more stodgy, or like just not understanding or not exposed to the industry.
mhm.
So that's like just have that differentiator and understanding it is where we make ourselves as Darien. Like we said, we're not a Bitcoin or crypto CPA. I've hired staff. I'm a DeFi. We're all are DeFi literate and just like really, really understanding. And I, like I said, I'll hold myself out to hold, wallets on 4 or 5 different chains. I love just to go dabble into things, time permitting. But most CPAs are just like, oh yeah, I see this money ball of crypto. I'll file taxes, but don't know what the heck they're doing.
Yeah. So do you guys, I assume it's a big problem right now with like you said, CPAs don't know a lot. And even if you understand like what the rules are around it, understanding what your client's trying to articulate to you is a whole different ballgame, right? Between talking about different chains and this token did this and this is a rug pull and this what you know what I mean? Like the lingo is going to be completely different from what the tax code says. So even if you'd understand as a CPA, what you do, you might not understand what your client's trying to explain to you if you're not involved in it. So with that, do you guys find that you have you're reaching out to a lot more CPAs individually or different companies that are doing, a certain amount of accounting about the DeFi space in general?
Yeah, we've
Hello? Lost him again.
also pretty
We
small and
lost you
close
there.
knit. So like,
We lost
oh,
you
sorry.
there right at the
Yeah.
beginning.
Oh, cool. It always happens, right? No. So, yeah, there's a few partners we have from the CPA front where we just kind of like do a sus check of like, are we going far enough, or has this been too far? Is like, where do they stand with certain treatment?
Mhm.
And then there's also a few like tax lawyers that we've liaised with just to see like where they're considering, and like we have a group that we're working with out of Utah that are like Bitcoin mining not taxable, and that's a really really fun argument to dive into. But apart from that, it's just kind of like reading the tea leaves, seeing where the regulation is, and just kind of also being almost a therapist to your clients, because it's not as easy as just saying here is where it's at. It's part therapist, part Oculus, part tarot reader, just like seeing where things are at. Like it's a very fun space to be in, but you have to understand and live with the ambiguity, but then just like be comfortable with some degree of that like uneasiness. But you wouldn't be involved in DeFi if you weren't a little uneasy.
Yeah, for sure. For sure. And so are you guys like let's say you have a client that's working with another CPA or, just a normal accountant, something like that. What is the role that you guys would play in that? Would you be handling kind of all the DeFi side of things and forwarding all the information to the CPA? Are you in constant contact? Are you doing like a report and writing it up? What is the kind of process that you go through there?
Yeah, we kind of liaise and sometimes be like subject matter experts. So in the
Mhm.
case of like working with a family office or an investment advisor or someone that has a more complex tax situation outside of their crypto and they want to retain that, explain the situation, paint the narrative, providing guidance on that, more of like a learning education resource. But with regards like the actual hard documents, we could get an 8949, which is what you file for your capital gains. An investment are basically a fees, income, closing positions report, as well as just a general summary report of this is what the heck happened for the past tax year.
Gotcha. So you're kind of taking care of the entire crypto side, essentially, the entire gains of crypto and gains and losses side of crypto, correct? And then you could
Exactly. And
also
then
branch into just full gains and losses reports.
correct, yeah. And we also work with quite a few like Web3 contributors. So devs, marketers, people getting paid, or like they have their own S Corp or consultancy working with other projects. So like we're comfortable handling their taxes, like I said, filing business individual from there. Or if you're just like, I've got my Schwab account, I've got my MetaMask wallet, help me out with that. I've got a W-2, file my taxes. Totally cool to help you out there. So we're pretty impartial. We just want to like serve the industry, the community.
Gotcha. Yeah, it makes sense. I'm not sure if you cut out or if you were done. Okay, I'm gonna assume he cut out. It was kind of abrupt, so it's all
Cool.
good. We're cutting out today.
Ah man, sorry. I'm on my Starlink, and Faisley, he's not paying for the primo subscription for me now.
You're good. You said you're on your Starlink.
Yeah, I'm on satellite right now.
Gotcha. The actual Starlink satellite. Perfect.
Yeah.
Awesome, awesome. Yeah. You cut out like talking about shoot, I
Oh
forgot the last word you said, but it's all good. I think we
no,
got
I
the
was
gist of it.
Yeah, I was gonna say like working with Web3 contributors, filing their taxes. So like if you're just like, hey, I'm dabbling in crypto, I've got a MetaMask wallet, I invest in Schwab or Vanguard, and I got a W-2 for my job, like love to have you file your taxes. Or if you self-file, we'll give you what you need to self-file with, Intuit, TurboTax, H&R Block, etc.
Yeah. Have you had okay, so this is something I actually had issues with at first is a lot of exchanges I found when you go back and try and request all your history, right? There was like they only let you request up to 6 months prior. Have you seen that? What do you guys do
Yes.
when you have people come in that are like they come in with only 6 months worth of information?
Yeah, I mean, getting an API key is generally the best because we can query that and get, more historical data outside of CSV exports.
Mm-hmm.
When that happens, we've got to take guesses. Very educated guesses, but guesses nonetheless. So if we see a bunch of deposits coming in, from a Binance wallet, like say you were invited on Binance.com before it shut out American investors, we just would either proxy the basis, proxy where that came from, and just do our best guess. Materiality underpins everything that we do, which is, does it make a difference? I'm not going to chase $100 transaction, but if I see a big like 5, 10, 100 grand payment,
This is just funny, guys.
where that
If you go back, if you see a big 110 grand payment, you were saying 100 to 110
Yeah, I would
grand.
say if I see a large payment, I'm going to definitely investigate that, but I'm not going to
Mm-hmm.
waste my time on something that's, pretty small. And Faisal, yeah, I work here. I'll listen to my mobile.
Awesome. um, yeah, so that's interesting. That definitely makes it tougher, but I understand. So what are the as far as clients and how high ticket clients are you dealing with? Because obviously the lower you are, the less it makes sense to actually, worry as much about claiming every single dollar, right? Because you're probably off by $20 or something like that. But how high ticket are the clients that you're dealing with on average?
Yeah, I mean, I would say generally most portfolios, and this is like not a barrier, but like where it makes sense to do our services, we start at 750. So if we have people with, portfolio over 50 to 75K, generally makes sense to go through with it. Just because I don't, and we've had smaller clients come to us, and not that I'd not love to work with you, but we also know that we can sometimes overkill a situation. And if you can get there with Coinly or Coin Tracker, and we just do like an advisor arrangement where, hey, I've got a question on how to treat this, or how would you do this, Cameron? I'm happy to lend it as opposed to doing like our full service model.
Yeah.
But we want to help where we can, but understanding that some people can't afford it or it just doesn't make sense. Because we got a process, it takes time and efforts to get through.
Hmm.
It's pretty standardized, and for smaller portfolios, the cost and benefit sometimes just doesn't weigh up.
Yeah. It's especially when you have those like one time costs. It's very, very worth it if you have a large portfolio. The smaller you go, the less it makes sense for sure.
Yeah. And it's also the less likely to be audited. So like as long as you get,
Mhm.
like I said, materially correct or reasonably there, you're pretty good to go. Like the IRS isn't gonna coming after you if you've got, 5, 10 grand of gains. But if you made 100 grand, they might sniff your return next year.
And that's like okay, so it's funny because my mom is actually a CPA, so she was talking to me a little bit about everything that's going on, um, and the whole situation. But isn't there something, if I'm remembering correctly, things are about 4 times as likely to be audited next year. Is that correct? Basically, the number of people that are doing audits have been bumped up significantly.
Yeah, there's a lot of I mean, like FUD around that, and there is some worry for it. But
Hmm.
right now, I mean, we're 4x where we're at right now, and the IRS is conducting audits at the lowest rate in like nearly 40 years. So
Gotcha.
if you want to be risky, I hate to say it, like this is your time to be risky. But with regards to kind of what the IRS is basically, they acknowledge where their faults are is
I don't know what's going on. It must be the mountains or something. No matter what, we're losing him. It's all good though. It's all good.
I was. You got me?
I got
I
you
can hear you.
now.
Hold on, can you hear me? Okay,
Yes.
that was weird. Yeah, I was saying like as far as like the FUD around that, like they're doing
Yeah.
4x and 4 times. But a lot of their support staff, it's basically hiring support staff,
Yeah.
which is to help like response times, letter writing, etc. So like I'd expect a lot more like lower grade audits, so like
Mhm.
1099 necks or stuff that's like been filed. Um, but with regards to everything else, I mean, I was saying like I'm a CPA. I call into the IRS. I still get on hold for 30 minutes to an hour. I used to get a hold of them pre-pandemic within like 3 to 5 minutes. So it's
Oh,
just
jeez.
they're overwhelmed and they know it. And everything's just gotten more complex with
Crypto.
pandemic relief, crypto, small businesses.
Yeah.
It's just they're and also being gutted by the various Congresses for the past 40 years.
Yeah, that doesn't, the whole crypto side really doesn't help. I mean, realistically, I wonder how many people that are at the highest level of the IRS understand crypto, and then even more so DeFi.
Yeah. Well, that's the thing is, where I get that question a lot too. It's like people, like clients will come to me saying, like, I'm going to submit this. I'll just make a good basket. It's like, good luck having some IRS agent understand what the hell I did on, Arbitrum last year. And there is merit to that. But the thing is when you file your taxes and sign off on that return or e-file, you're submitting that under penalties of perjury,
Mm-hmm.
which means if you don't do it right, you go to jail.
Mm-hmm.
So in that case too, if you don't have good readable data that you can sit on a call or work with a tax lawyer to illustrate the narrative, uh, you're going to be in trouble. So you want to make sure it's something you can defend and also relate later on, and not just give a proverbial digital shoebox of receipts.
Yeah, yeah, that makes sense. So with the smaller ticket client, let's say you have them, because with someone larger, it makes 100% sense to use, with the service that you guys are providing. But if someone was, let's say, in the realm of something, I mean, let's just say much smaller, right? You have somebody that
Yeah.
only has a couple grand even in crypto. Like, what would be the thought behind keeping track of all these things? Because even if your gains were, up to 10 grand in the next run or something like that, you obviously don't want to be caught messing something up on your return. You know what I mean? So what would be the way that you go about that at that point?
Yeah, I mean, there's a lot of decent like retail solutions out there just to track like CoinTracker.io is decent, Coinly is decent, but it's one of those things of with just regards to all tax compliance is does the cost to comply with that tax outweigh the tax owed, and if that's the case then you're reasonable to not actually comply with it or just basically make a proxy. So like do your best you can, like if you have a $5,000-$10,000 portfolio or like a couple thousand gains, like estimate, do your best, file something. They're not gonna, hold you out to be, acting fraudulent of that sort. But then when things do get there, you might want to revisit. And we've had clients, I bought stuff back in 2017, 2018, didn't do anything, and then things blew up overnight. We can go back and do, procedures on prior years as long as we have the data.
Gotcha, gotcha. So basically, just do your best to keep track of info and move forward and keep a hold of
Yeah.
that.
Yeah, just do your best and no one's gonna fault you. As long as you're not acting, with malfeasance or malevolence,
Trying to
you'll
hide
be all
it.
right.
Yeah.
Yeah.
Fair enough. Fair enough. Gotcha. All right. I got a couple questions I wanna start getting to. Uh, what happens when a project rugs and there isn't any
Ooh,
liquidity left to sell your tokens? Can you technically not write that off as a realized loss?
great question. Depends. That's a CPA cop out. No, so there's a couple different natures with that is if it hasn't been realized, technically it's not a capital loss because you haven't sold anything. But what some clients have done in the past is they will just consider that a loss as the data's been rugged or liquidity's drained, etc., and just take it as the date of that event and just write it off as if it was sold as that date to zero. The alternative, which is a little bit more kind of correct, but depends on, again, with your risk comfort, is claiming an abandonment loss. And this is what we're exploring right now with, Terra Luna and where the Luna Classic chain goes. And basically an abandonment loss, like harkening back to when we were just starting the call, is this abandonment means like I'm not going to use it anymore. And because I'm abandoning it, I get to take a loss for that. And abandonment losses are actually offset against ordinary income. So like W-2 wages, staking rewards,
Interesting.
business income, etc. Whereas capital losses are capital offset against capital gains. So it is a better loss, but it also takes an assertion to the IRS for that reason. So in that case, what I would do when what I've done also for my own portfolio, so your mileage may vary, is if something gets rugged or scammed, I'll just write off it as of that date because it's been lost. I can't recover it. There's no way to exit it, and just take the loss as it, take the L as it then. And this is what we did. Notable examples like with the Cream hack last year is like when that date happened and the liquidity got drained, we just marked that as a loss for our clients.
Gotcha. That's super interesting. So are you keeping track of some of this thing throughout the year? Like if someone were to approach you in January, are you guys actively keeping track of what's going on with their portfolios, or is it, waiting until the end of the year for that?
Yeah, pre-work is the best because it's not like tax filing where you have to wait on the documents you get from all your employers, investment accounts. Our best, like we're telling this to our clients right now, is like if we can do 90% of our procedures before December, fantastic. It saves us work during crunch time. But as far as like knowing what goes on, we'll see some stuff. But when it comes to like, hey, this NFT, is worthless, or I got rugged here on this random LP on, Binance, that just really helps like an open conversation narrative. So we always ask our clients like, we see what's there, we understand our procedures, but if there's anything funky or anything notable, just tell us and we'll make sure it's flagged and updated in the report because we're only going to see the actual trades, the withdrawals, the deposits, the exchanges as they go through. And if there's anything, off color, we'd love our clients' help on that. Barring like Terra Luna, FTX, and the big ones that make CoinDesk.
Yeah, yep. Gotcha. Those you might know a little bit about, right? I'd hope.
I wouldn't say we were personally exposed to, and also our firm was in Terra Luna. Again, Cosmos, IBC fan, stablecoin, sovereign chain. But yeah, and a lot of our clients were hit as well. But that's one we're personally motivated to find a solution on, and we want to make sure that we can take something reasonable, but also more aggressive, just knowing that it was messed up, man. And same with FTX. Like, it's weird. It's messed up.
Yeah, definitely. So as far as going to the NFTs a little bit, like similar to the rug pull example, let's just say a dead NFT collection. Do you claim that as a loss? Do you claim that as abandonment? What would you do there?
Yeah, if there's no market for it and like there's no liquidity, you can mark the loss as the date of that, like you can't actually sell it. But in the case of, NFTs have gone to zero, the best case you have is to realize it and just burn it. Burn it, send it somewhere, get rid of it, and then you have a realized loss. When it comes to an abandonment loss, like I said, you're making an assertion to the IRS where you're saying that I am no longer using this and demonstrating that in the case of the IRS audit. Again, like explaining this, manager explains to a 55-year-old IRS agent. You want to make sure you have a more defensible position, which making things realized is a lot easier. So,
So what if you couldn't realize that? Would you be able to write it off? Like, or could you just send it to the dead wallet and call it a day? Like, is it possible to realize
yeah.
it in that way, even if what would you realize it as? Like just a zero? Like,
Yeah, it would. Yeah, as soon as you cede your control. So if you send it back to the dev wallet or just send it to some random contract address that's outside of your control, that's been realized. That's gone. An abandonment loss is more used for like it can be used for rugs, but it's better used for liquidity draining, hacks, stolen events, stuff outside of that control. But if it just went to zero, you're better off just realizing it from a defensibility standpoint.
Gotcha.
Which is burn. Yeah, burning it.
Yeah.
You can send it to me. I'll take more NFTs.
By the end of the year, you're just gonna have like 15,000 NFTs sitting in a wallet.
Exactly. All
Adding
these
up to like
worthless
$5. For sure.
I'm just in crypto for the memes anyway. It's not for the money.
There you go. Let's see. What are the questions? Could you burn the tokens and count it as count it as that loss? Is what Zach said. Zach, I
Yeah,
think he said
yeah,
yes.
yep, yeah. As soon as you burn, if you send it to the dev wallet or just send it to somebody else, it's been marked as realized, and then it's out of your control. It's no longer, you can't send it, exchange it, whatever. That event has been realized.
But you said it would be better to claim abandonment because then you're taking taxes off your income, not even your.
Yeah,
Gotcha.
yeah,
That's super interesting. I didn't know that.
yeah, and you can. I mean, it's tougher to prove,
Hmm.
and especially in wake of the TCGA. So back in 2017, basically the Trump tax bill, it got rid of like casualty losses for stolen items. So it's like a way to roundabout get there. It takes a separate filing. It takes like a statement of what happened. So I'd use it for like cases where things were stolen, or you're basically like ceding control, or I'm never gonna be able to recover it, or like we said earlier, I throw my ledger into the ocean and I can't get it back. Um, but it's better to have a capital loss is a better defensible loss, but an abandonment loss is a better tax loss.
Gotcha. Gotcha.
Yep, yep.
Everything good?
I'm like in, I'm like in and out, so I wasn't sure
Oh,
there.
oh,
So
no, you're good. You're good. I'm listening. I was just thinking about it.
okay,
That's interesting. I'm looking through the questions right now for anything else, but I think we're caught up. Is it okay? Let me read through to make sure I'm understanding this. I and gamer, I don't think that works. He goes, this is kind of unrelated. Is it possible to have your company trademark in a country with essentially lower taxes and your main company in America, and then pay tax in the country with the lower rate? This is like the step one to any business question, right?
yeah. I mean, what's this? I mean, phase of my life. It's like what the double Dutch Irish or whatever. As far as like moving IP overseas. So with that, I can give some again non-binding tax advice on this, and don't hold me to it. But if you are, and this is also with regards to foreign entities. So if something, say you like form a entity in like Dubai or Singapore or Hong Kong, if that entity is greater than 50% U.S. owned, so like U.S. taxpayer owned, it's deemed to be a U.S. corporation and required to file a foreign tax return or a foreign corporation or business return here in the States and basically pay tax as if they were a U.S. tax resident. So that's something where, generally offshore is a little bit more difficult. And at the end of the day, anything you do make, even living onshore, once you repatriate, will be subject to tax. Uh, if you're looking to go that route, there is FEIE, so the foreign earned income exclusion. It won't offset your trading income, but it will offset any active income to the tune of 112K a year. That's benefit for like people living overseas, digital nomads, etc. And then your best onshore offshore arrangement, and I'm not going to hold myself out to be a tax expert here, but Puerto Rico has, very beneficial capital gains rules for their residents.
Interesting. Interesting.
But then hurricanes, I'm not a hurricane fan, so
Gotcha. Yeah, I know of a couple people actually that had moved to Puerto Rico in the past few years because of the capital gains differences, and I thought that was very interesting. I was like, you just uprooted your life just for it. I mean, sure. I mean, go for it.
yeah.
Just not something I was like super enthusiastic about myself doing, but it is an interesting thing, for sure.
The virtue of having a U.S. passport. I mean, you got to pay taxes, but part of the game.
Right? Yeah, yeah. It's a good and bad thing, definitely. There's pros and cons, but I mean, if you're getting taxed, it means you're making money. So there is that.
Exactly.
It's funny to me. There are people that they're like, shoot, I don't want to make like I don't want to do that because then I have to pay these taxes. Like you know what I mean? They're like, what about paying crypto taxes when like I'll tell them like, hey, if you're interested in crypto, this is probably a good time to start looking into it because prices are down, right? Don't look into it in a year and a half from now. Like look into it now. And they're like, I just don't want to pay taxes on it. And it's like, hold up, like you understand how this works, right?
Yeah.
You only
If
pay
you're paying
taxes when you're
taxes,
making money.
you've made money.
Exactly.
Exactly.
And I'm just like talking them
Well,
through this. I'm like, look, you're not going to pay anything if you don't sell it. Like, and you're also not going to pay anything if you lose money. So you're making money. You're not paying more taxes than you're making. Like, let's just let's just leave it at that. It's just funny to me. I think people have like the wrong idea. There's like this negative association with taxes, so much so that they don't even want to make the money to have to pay taxes on. And it's like it just
Yeah.
confuses me, throws me through the loop.
No, and a good segue on that too. These is like two tips as well as like full well knowing all the paper gains to the last bull run and where we stand right now is like two bits of advice, and this is also just like strategies. So with regards to like staking rewards or ordinary income, unfortunately, or airdrops even, like you're taxed as that comes into your wallet. Like that's realized, but like that token may depreciate overnight to like 50%, and then you have a capital loss, but you can't offset that ordinary income. So generally, and this
Really?
is like if you're risk on or if you're risk on or risk off. Like if you're risk on, like take it and run with it and just like keep stacking. But if you're more risk off, you get an airdrop, you get staking rewards, etc. Drop that into some sort of stable coin or a less risky asset to realize some of that benefit. Because I think about people I worked with last year where they were earning SOL at 200 and now it's not, but they're paying tax on when it was 200 unfortunately, and now like, oh, you got a capital loss, but they can't really do anything to offset that ordinary income this year. So that's something where in a declining depreciating market is probably a good strategy. In appreciating market, like you're just stacking more crypto, which can exponentially grow. And if you're risk on, like keep stacking it, but also just set aside some cash to pay the tax on that ordinary income. Um,
Yeah.
and also too, like again with paper gains, and this happens a lot within DeFi, is like when you exchange assets, enter LP pools, enter vaults, etc. Like those are all taxable events. Like you're getting hit and dimed, and if the market's up, you're recognizing phantom gains. So in cases of like right now, when we have dips or losses, is take those, harvest it, and if you're long on ETH, AVAX, Poly, whatever, name your project, you're gonna hold it for the next 6 to 9 months, 12 months beyond. Sell it, recognize the paper loss, bank that away for future benefit, and then when you do have those paper gains, you've got paper losses to offset against it. So just a small tidbit tax advice. In a down market, just use these losses to your advantage. They suck,
Gotcha.
but use them to your advantage.
Would you recommend, like, for somebody that had, let's say you have people that are DCAing, right, from earlier this year, would you say that it'd be better to offset? I mean, if you don't have gains, there's no point in offsetting, right? I guess it's the point I'm getting at. Like most people, I'd say probably don't have insane gains this year. Like there are people 100% that have solid gains.
Yeah,
Just from putting in the right projects at the right times, trading, other things like that. But for
I
individuals
want their
that,
alpha.
what was that?
So I want their alpha if they're making money.
Yeah, exactly. um, there's a handful of projects that I know have exploded, and you just had to take profit at the right times. But with that, what is the overall strategy? Like, let's say you don't have any gains. Like, correct me if I'm wrong, but wouldn't it be more ideal not to sell and just hold on to the asset? Because the second you sell and buy back in, because I know that was common. When you do
Mhm.
that, you're now resetting, what your entry point is, right? So then technically it's all profit from like these lower prices.
What,
Is that right? Like if
yeah,
you were to write it to a bull run?
yeah, let's illustrate this with like let's put some numbers to it. Sorry for being a CPA, but
No,
like
you're good.
say you're me, and you had some euphoria back in November and you bought your Bitcoin at like 55, right? Which I totally did. But right now I'm still holding that and it's trading around like 16 to 20. Now I am still like I bought my hypothetically speaking, I bought one Bitcoin at 55. It's at 20 now. What I can do is just like sell that, recognize a 35 grand capital loss, reset my basis to 20, and then I can use that loss against gains of other projects or other income this year or
Hmm.
until it's exhausted until I die. So it's something to kind of like, even though it's a paper loss, you definitely beneficial taking it because you can offset against paper gains going forward and you still can hold that one Bitcoin. It's just like you have that in reserve. And that's if you have exposure to other projects, you are trading. It's just good to recognize it. But like I said, speaking 2020 hindsight of a bunch of paper gains, it's good to have paper losses to offset it. So that's what I would recommend. Again, if you have that. So, and even if you're DCAing, depending upon what cost basing strategy, we recommend either Opti, which is just like prioritize long term capital gains and also like push as much away from short term, or you can use like specific identification to push down your tax balance to zero and choose your right lots. So if you bought Bitcoin at 55, 30, 15, we're going to choose to sell the one that's got the highest loss to offset against any other gains in your
Mhm.
portfolio.
Let's say you don't have any gains, right? Let's say you just hodl. There would be no point in
Yeah.
selling it off at that point, right? Because then you're just resetting the cost basis, and then it's in essence you're just putting yourself in a worse position next time you end up selling, correct?
Depends. Again, that's I would say like if you have different tokens, right? Like you have your
Mm-hmm.
Bitcoin bag that you're looking to hold for forever,
Mm-hmm.
but you're like you have a trading wallet that you're recognizing gains back and forth. Like
Yeah.
it'd be beneficial to hold that, recognize that loss and then
Yeah.
offset that against all these capital gains going forward.
Yeah.
And because watch sale rules don't apply to crypto, because crypto is property for now until Gary Gensler gets his way, you can literally sell that, buy it back 30 seconds later, and be no worse for wear. So it is beneficial. It depends on your overall strategy, and that's speaking like if you are trading and doing anything of sort where you are recognizing a lot of gains. If you are if you are like a hodler, you're just stacking every single week, and you have no intention to sell, or you're not trading. You're just like keep buy, 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 buy. I mean, you can sell. But if you're not doing any sort of trade activity, you're not going to have any capital gains. But it is something, like I said, is you can bank away it and offset in the future. So if you have this gain of BTC, you can offset it against, your paper loss. Sorry, offset against your paper gain 1, 2, 3 years in the future.
Really? So you,
So
you
it's kind
can
of like
do
don't
it
let it get towards the face.
you can do it way all out there. Like it does not have to be the same year. I wasn't aware
Oh
of
yeah,
that
yeah,
either.
yeah. So like with capital losses, they first get offset against capital gains in the current year. Then whatever's left over is deducted at 3 grand a year or 6 grand if you're married. So go get hitched. And, woo, 3 grand of tax benefit. But if not, that gets carried forward in perpetuity until you literally go 6 feet under. So it's something where I mean, and I'll speak from experience. My parents, they had a business back in the early 2000s. They exited as a capital loss, not crypto, but investment. And they're still realizing the benefit and essentially like trading their brokerage accounts tax free because they incurred that loss way long ago. So
Yeah.
it is beneficial in that sense, especially if you are looking to earn income in higher and longer, in future years and have higher incomes, because you're going to be saving taxes when you're at a higher tax rate as opposed to today when you're at a lower tax rate. We all do making more money in the future.
Yeah. Yeah. I
Inflationary coming.
I'd hope so. I'd hope we all are. I mean, even if we're, yeah, like you said, with inflation coming, kind of have to be pretty soon here. Yeah,
Yeah.
that's some interesting stuff. Is there anything else you wanted to touch up on as far as what you guys do or what's going on? I think this is more of like an entertaining AMA that we had. A lot of them are a lot more focused on projects, but it was a lot more conversational. So I enjoyed it today.
Yeah, equally. It's been a pleasure having me on. I'd love to do some more and just like share more, resources and like part of the reason why I'm here and I mean why I first got into my first tax practice is
Mhm.
that, CPAs are boring, they suck, they're not approachable. And like part of what Faisal and I have crafted is something to be more human centric and just like reveal get rid of the mystique of crypto. And like, we want to make sure that people feel inclusive, that they're able to access it. And there's no such thing as there's no question that's unholy. I love the weird. I love addressing it. I love kind of the thought experiments because we're in a weird space and that's half the fun of my job. But I guess, anything outside to kind of share that we do, is, I say where our key differentiating point and where we really provide value to our clients is like looking at events in DeFi and just like I said, turning things and just like looking at them slightly on edge. And I'll illustrate this with an example is we'll talk about like Aave faults, like super super kosher. You take your WETH, you drop it into a position, you receive interest income back. Awesome.
Mhm.
But how that actually functions on chain is you have your WETH. You're actually exchanging that for AMW WETH, which is their Aave compounding token, and therefore could potentially be considered to be a taxable event. We have argued this, and some of our clients are comfortable with this, saying, actually, I'm depositing my WETH into that contract. I'm just getting that AM WETH as a receipt or token to redeem upon whenever I want to exit that position, and it has no real value, and I get to contain or basically roll my basis from that initial transaction forward and not recognize a capital event. And that's where just outside of like a lot of these crypto tax aggregators where people just like putting things together. That's where we really, really love to sink our teeth into, is just going, how could that be construed? Because there's nothing apart from a couple FAQs and advisory notices from the IRS. Everything's going to be argued in tax courts. And right now, where the IRS is at is, are staking rewards taxable? And you know what? The IRS said, not worth our time in the chair. It's not making enough money. We're not going to answer that question. So we're still very much wild, wild west on staking rewards. And that means like DeFi, LPs, play to earn, NFTs are going to be argued in the tax courts the next like 5 to 10 years. So
Really? Okay.
things are mutable, things can be amended. And that's where understanding how far you want to go and where, like I said, where you fall in that risk spectrum is critical, because we have some clients saying like, I want to keep the monkey off my back. I don't even want to think about this. If I get audited, I want to say, hey, I took the most conservative approach. Great. I respect you. But if you want to go further and arguing that, hey, going to ETH isn't taxable, it's just like, a wrapper it's like putting a coat on my ETH and therefore it's not taxable. It's just taking a coat to go, somewhere for the north, because it's cold. I can get that as well. So that's where I like that fun part.
Try and explain that to somebody in the IRS that's never dealt in crypto.
Yeah, my ETH put a coat on it, went to Canada, and that's why it's not taxable. Like,
Yeah, exactly. Good luck. That's funny. Yeah, I think it's super fascinating to me. I don't know. It really is interesting, the different strategies that people can take. I'm curious to see how everything turns up. I can't wait until the day when it's like, oh yeah, I'm a CPA. Wait, do I do crypto? Wait, what do you mean? Like, is that a normal thing not to? You know what I mean? Like, I can't
right.
wait until it's the norm for people to be able to do that kind of stuff and simply.
I mean, Chris, for full context, when I launched my first practice, this is like before COVID made it cool. Like, we were fully remote, decentralized back in 2017 as a bookkeeping tax practice. And you would have thought people's minds were blown by the fact that, oh, you can do business paperless. And it was because I was hippie. I just don't like to deal with paper. But, like taking that like mentality of like an actual physical office, brick and mortar for CPAs, you throw the pandemic at them and then throw crypto. Like, there's a lot of just like economies of scale, and we've liaised with KPMG, PwC, just to see where their pulse is at, and they're like, this is what an NFT is. What's the difference between a fungible and non-fungible token? Which is great for mainstream adoption. But we're kind of focused on, like I said, the more fun use cases and trying to help advance that curve. So, all the fun devs and investors, DeFi degens can keep doing what they love to do best. Lose
Yeah,
money.
I love that. I love that. Yeah, make and lose money, right? A little bit of
Yeah.
both. Um,
Yeah.
or maybe this year a lot of one and not as much as the other. But yeah,
You
it's
gotta
been.
have good experience. I wouldn't be here if I didn't love it.
No, I definitely got you. I think everyone here realizes that it's the future and we're still early on. So long term,
Yep.
a lot of these losses aren't really losses. It's just kind of the ebb and flow of the market, right? Um,
Exactly.
but yeah, anyways, it's been really, really good chatting for the past hour. Let me know if you got anything else. And if you are in the crew, we have some discounts for you. So if you have, like you was saying, if you guys have, usually the clients you deal with, you were saying, I believe you said like 50, 75K, right, in assets. Is that about
Yep.
correct? Okay, yeah, awesome.
Yeah, yeah, it's a good proxy. But like, if you have any questions or just want to understand, we do like do a free intake discovery call just to understand like where you at and how we could find a way to jam together. And like, I'm happy to work with anybody on like an advisory basis if you need that help. But for our full service, like, yeah, I would say like where it makes sense is somewhere with a portfolio between at least 50K, just because you don't want to drop our fee. I mean, it also depends on your complexity and what you're up to, and if you need that kind of support. And kind of think about it like, is it worth engaging our services to potentially save you that? Like, if we save you $1,000 on your taxes or $1,500, we've made back your fee and you're all better for it. But if you don't have that much to save, I'd love to work with you, but I understand we're probably not worth
Yeah,
it.
yeah, well, 100%. And so, even if it's just saving some time out of your guys' day, just making sure you're saving some money, um, look into it. Look into it. If you don't, like he said, you have the funds and it makes sense, and you're gonna benefit more than you're gonna spend, then 100% check it out. If you have $1,000 in the market, it's probably not the best thing for you. Put some more money into the market. Focus on that, not on spending that money on accounting.
I'll quote Faisal here, which is prioritize, making money and not about minimizing your taxes.
There we go. There we go. Exactly. Exactly. I think that's probably the best quote to end on today. But anyways, all right. It's been really good, and I hope we chat again. But have a good rest of your day, and guys, thank you for tuning in. If you guys have any other questions, feel free to let them know as we kind of move forward. But anyways, it's been a good last hour.
Equally, thanks, Chris. It's been a pleasure. Love to sync up again, and thank you for having me and Darien Advisors. Thanks again.
Awesome. Have a good one.